Hey guys, what's going on? I want to take a quick look at Bitcoin currently on the weekly time frame. So we had a big move to the upside today on the announcement of something to do with Grayscale and an ETF. I think they won their lawsuit against the SEC. But before the move up today, we were showing a bullish divergence on the oscillator. And here, I'll show you just a couple days I posted right here. And I said we're putting in a hidden bullish divergence. So I'll go back to the chart and I'll kind of explain what that is. So a hidden divergence is basically when you have the price making higher lows. So for example, we put in the low right here, and then this drop down was a higher low, but the oscillator puts in a lower low. So on this divergence indicator, we had this low, and then we put in a lower low, right? You see that? And then compare that to the price. So on the price, we had the low and then a higher low. So see how that works? That's just called a hidden bullish divergence, and it gave us an early warning sign that the price may turn upwards. Now, I wasn't calling the future or anything. I still said it could still go down. I'm not really sure, but it's just you got to take in all the information, the bull case and the bear case, and then you base your analysis off of that. Take in all the factors and then decide what you're going to do based on what you're seeing on the oscillators and the price action. Okay, so now we find ourselves, I'm going to change this down to the daily so we can get a better look at where we may potentially be getting resistance. So as you can see right now, actually on the breakdown, I had this level marked out. I think this was the 50% Fibonacci retracement, and it lined up perfectly with this previous resistance level. So I thought that this would give us a bounce, but we cut right through it. Bitcoin dumped hard, but now on the upside, it's serving as a resistance level, right? So this level here, I have it around a little over 28,000, 2880. So this level here is going to give us some problems. And then also, if you just take a trend line right here, which is what I've done, and connect the top here with these two tops. So we have a valid trend line with 3 touches right now. So if the price is able to break through this 28,000 level, I think that this level right here, currently it's around 28,478, but that of course is down sloping, so the price could be lower by the time the price reaches it if the price gets there. So I expect that this is going to be a level of resistance as well. But first, yeah, we got to crack this 28,000 level. Now, a potential trade right now, actually, you know what? I'm going to change the chart and I'm going to take a look at a smaller time frame. So in this chart, I have the daily time frame open, and I just showed you that we had a hidden bullish divergence on the weekly time frame, but it also showed on the daily time frame. And on the other chart, the oscillator that I was showing you was called a divergence indicator, but this one is the RSI. And as you can see on the RSI, we had the hidden bullish divergence. We had a lower low on the RSI, while we had a higher low on the price, right? You see how that works? So yeah, hidden bullish divergence kind of gave us a heads up that this may turn around. Now, prior to the announcement, the price actually looked very weak, despite having this hidden bullish divergence. But obviously, I think the announcement today is what caused this spike and not this. Okay, so let's change the time frame here. I'll draw this down sloping resistance line on this as well. So you can see, okay, so we got to be aware of where this is. But right now, yeah, around this 28,000 region, this is the current level of resistance. So I suppose what we could do, the play right now, I wouldn't long this big candle for a short-term trade. Instead, if I were to take a trade, if I was to enter right here, I'd place my stop loss above just the wick right here, and my target would have to be this level, so this previous resistance level. This particular trade would give me a risk reward ratio of 1 to 1.87. It's not really ideal. It's okay. I would risk 1.16% to potentially get 2.18% to the downside. And of course, I can amplify that a little bit. And of course, I could amplify that with a little bit of leverage. Ideally would be if, the price does come up to this downsloping level of resistance, and then I enter from here, for example, then I'm going to have a much better. So if the price came here, I place my stop above this downsloping level of resistance, pending some sort of bearish candle formation or something that indicates that we're going to reverse. Maybe a doji and then a red candle following that. I could enter. If I entered here, place my stop loss above the resistance level, and then target this lower region, that would give me a risk reward ratio of 1 to 2.4, a little bit better. I would risk 1.44% and to potentially get 3.46% to the downside. So yeah, that's a particular trade setup that I may consider taking if the opportunity presents itself. But if I look to the higher time frame here, let's see how it looks on the weekly. Yeah, we are faced with a lot of resistance, but this is a very bullish candle. I really hope we're able to break out of this resistance level and continue our move up. But another thing that kind of makes the case stronger that we're going to see a pullback right here after this move, maybe from where we are now, if not here, this downsloping level of resistance, or you see this here, this previous support level. We haven't yet retested this. So this was support for a few weeks. This was the 38.2 retracement level at around 28,900. It would make sense if we do push higher for the wick of this to come and test this level, this previous support level as the resistance, and then maybe we get a candle body close below this downsloping level of resistance. That would make sense, and then we come back and do a retest on this 27,250 range. That would make sense. And one thing that is making me believe that we do end up coming down after this move is if I go here and I look at the liquidation levels, you see the general retail public is usually wrong, right? So oftentimes when you see them all piling into the longs and the shorts just got wiped out off this up move, what the market makers may like to do is just drive it back down, take out all these people that are longing on leverage before moving it back up, right? Or they may move it back up, take out what's left of the near-term short positions, and then move it back down and wipe these guys out, and then pump it back to the upside for a larger move. But when you look at this and you see like, you know, this huge pile of longs and such few people shorting, these guys are usually wrong. So I would not be surprised if we do come down here, retest at least this level, and then from there choose a direction, right? Now, in the previous Bitcoin analysis videos, I mentioned the 24,000 range, about anywhere from 23,005 to 24,500. That's an important range, and there's a lot of people that are going to be liquidated if the price does hit that region. And for that reason, it's likely that the market makers will push it down right around here, maybe a wick below, take people out. But yeah, all in all, guys, like nobody really knows which way it's going to go. These are just the levels to watch, and you got to think like the market makers and what you think they're going to do based on where the liquidity is, right? And you know how many people are longing versus how many people are in shorts. But to wrap it up, all I can say right now is we have come up to this resistance level, right? We're starting to get a sell-off right now. If this horizontal resistance breaks, then you're going to have this downsloping resistance level to deal with. And then beyond that, it's going to be this previous support level right here where the 38.2 retracement was. And that's around 28,900 or so. So these are your levels to the upside. Just go to a smaller time frame and see how the candles are forming. If it's bullish, if it's bearish, whatever, base your trades off that. But as of right now, we are at a resistance. And the next level down from here, if this sells off, is going to be right here at the $27,250 range. If this breaks, then you're obviously going to come back down to retest these lows. Actually, if this level breaks, then I do think that this up move, which is to wipe out the shorters, and then we're going to come down, take out the longs, and take out this liquidity region, again around the 23,500 to 24,500 range. Anyway, guys, hopefully that was helpful. If it was and you want to get notified when I release new videos, click subscribe, click the bell, click on all. And if you want an exchange to trade these assets on, the one I'm using is linked in the pinned comment and the description. And the one I'm using will not ask you for KYC. They don't have a KYC process, or they do, but it's not mandatory. And so you don't have to submit any of your personal documents, right? And if you want to use it, you may need to use a VPN, just depending on your current location. But I also put a link to a promotion on a VPN in the pinned comment and the description as well. All right, guys, those are your levels, and hopefully you found it helpful. Take care. Bye.